Welcome back. We are here looking at the commodities market and the precious metals market, and this is going to be my daily forecast for Monday, May 3rd, 2021. So we'll start by looking at the US dollar index, and as you can see on Friday, we almost rallied 1%. That was always going to happen as we have been depreciating for nearly an entire month, basically an entire month. So we were significantly oversold, we were overstretched here, and the pullback was always going to happen. So it happened on Friday, started basically late on Thursday, but on Friday it really took off. But we're still trending underneath the 20 exponential. So we haven't crossed the 20, we haven't crossed the middle of the bullish band, haven't crossed the 50 or even the 200. So there's a lot of resistance above. This could easily just turn around here and head back towards the very lows. If we manage to break above here, then we could go and retest the 200 moving average and then beyond that. But this looks like just a continuation of this downward trend. So we're still in a downward trend, and rallies towards the 200 moving average, they have happened before. We got really close here and then broke down. So this could just be a one-off rally on Friday, and then we continue back towards the downside. However, technical indicators are all turning around. So we could also stay around here. We could rally up towards the 200 moving average, but at this current stage, the technical indicators are favoring the upside. So let's look at oil. So one consequence of this, that the US dollar becomes more expensive, the oil also becomes more cheap because there's a negative correlation between the US dollar and oil prices, as they are priced in dollars. So as you can see, we did fall roughly 2% in WTI and are basically heading back towards support down here in the middle of the bullish band. So 61.58 is where we found support in the past, or the middle of the bullish band here. If that breaks, then we could drop to the very bottom, which is at 58.26. Technical indicators are fairly mixed. MACD is bullish, CCI is becoming bearish, stochastic, is becoming bearish, CCI is bullish still, and the RSI is becoming bearish. So break above this candlestick here could open the door to 67. So let's look at natural gas. So natural gas did fall on Thursday and then rallied again on Friday. So yes, I don't know how to read into this. It is still on the edge of being overbought. So we're at 68, and we were outside of the Bollinger Band here. Usually it can fall towards the support again at the 20 exponential, 2.577. But at this point, we are rallying again. So if you look at technical indicators, if they are anything to go by, then we can see that the MACD is very bullish, the stochastic is bearish, and the CCI is bullish at this current stage. The thing is that if we rally from here, we'll run into the $3 range and we'll get significantly overbought, and then we'll probably have a bigger fall. If we are going to go a sustainable, have more sustainable growth to the upside, then a pullback will most likely be expected before going back up. That means that RSI will become lower and will not become overstretched here. But support will most likely be around 2.77. If that breaks, then we have the 50 moving average and the 200 moving average right here at 2.69. So let's look at copper. So copper started to fall, and it looks like a shooting star here, which is a bearish indication. But after this massive rally here up towards 4.5, it was always expected for this to pull back towards support, which is down here at the 20 exponential, which also is the previous highs here. So this is at 4.28. If that breaks, then you have the 50 here at the 4.14. Technical indicators are all turning around. So we were overbought, overstretched, and the pullback was always going to happen. It's also end of the month. People were basically cashing out and were basically hitting their target at the 4.5. So pullback at this current stage in the beginning of May, it could be possible before going higher from here. So let's look at gold. So gold continues to fall. It has been falling the last week and a half. Technical indicators are all looking very bearish indeed. We are approaching its support down here at the 20 exponential at trading right at, give or take, 1768. If we break below here, the 50 moving average will also offer support down at 1744 and the bottom of the bullish band at 1721. If the 50 breaks, then we'll also probably drop all the way down to the very bottom here where we have this double bottom. So yes, it is to be seen. If we rally from here, the previous highs of 1800, give or take, will most likely also offer resistance. Break above that opens the door to the 200 at 1850. So let's look at silver. So silver has, similar to gold, it usually follows, has been falling gradually towards its support at the 50 and the 20 exponential and is basically holding there. Technical indicators are very bearish for silver, so we could see this drop towards the 200 moving average, which has been support in the past. Rallies from here most likely find resistance at the 26.59. You can see that is same here and same over here. So 26.60, 62, give or take, is an area which has been a problem for silver to get through. If that breaks, then we can go towards 27 and 28 and beyond that. So let's look at platinum. So you can see platinum was basically all over the place on Friday. It dropped towards its support on Thursday, rallied, and then it gave most of those gains back. So at this current stage, we're hovering just at the 50 moving average. Technical indicators are fairly bearish at this point. MACD is bearish, CCI, stochastic is bearish, CCI is in the bearish territory, and the RSI is also bearish. So this could be that will drop back towards support before going higher. It has been rallying, breaking down, rallying, broken down, and then just going gradually. Most likely, a long-term target here will be 1300, which was the previous highs here. So let's look at Palladium. So this was a market that not very recently, so back in basically end of February, was trading within a square and was probably the most boring market to trade overall. It was just steadily going in between here, and then it just snapped to the upside. So looking at this market, it's getting fairly overstretched. So it basically broke the previous highs here. So what I'm expecting for this market is basically for this to pull back towards support, which is the previous highs here of 2.783, and also where we find the middle of the Bollinger Band and the 20 exponential. So we have this very negative candlestick on Friday. So this could be a warning that we could break down towards this level here before going higher. We did approach 3,000, and that's probably why people sold off. So we were significantly overbought. Technical indicators are also turning around. So MACD is still bullish, but stochastic is bearish, and the CCI is becoming bearish. So they're all leveling off and heading towards the downside. So this is a very negative candlestick, so I wouldn't be surprised if this fell towards support before going higher. So let's look at aluminium. So aluminium is also running into resistance up here on top of the Bollinger Band. We are on the edge of being overbought. Technical indicators are still bullish, but they are leveling off. So this has been trending above the top of the Bollinger Band and then breaking down, and that's kind of what I expected at this point. So buying it here is very risky. So a pullback is technically the right strategy here, like this, and then buying at the pullbacks. If it breaks down below the 20 exponential, then we'll open the door to the 50 down here at the 2,231. Otherwise, probably 2,500 will be the target for the next few months. So let's look at nickel. So nickel is also getting very overstretched. So we have basically rallied from the 200 moving average. I was expecting for this to pull back towards the 50 moving average before going higher, but but it continued to rally on Friday. There's still some room to the upside. Technical indicators are bullish or flat. Stochastic MACD is bullish, the stochastic is flat, and the CCI is bullish at this point, and the RSI is also bullish. So we are getting significantly outside of the bullish band here, so pullback should be expected before going higher. So let's look at sugar. So sugar fell on Thursday all the way down to support at the 20 exponential and then rallied again on Friday. So technical indicators, they are fairly mixed at this point. MACD is bullish, stochastic is bearish, the CCI is becoming bearish, and the RSI is flat. So we could see this pull back towards the 20 exponential and just hover around there before going higher again. If we stabilize in this area, it will be a sign of support and that we are ready to go higher. To get a V-shaped recovery here looks fairly improbable. That's not usually how this market behaves. It usually falls and then stabilizes and then it continues higher. But it has been a massive rally to the upside, and a pullback was always expected. So let's look at cotton. So very similar here, massive rally to the upside, fell back towards support at the 20 exponential and then rallied. Technical indicators are still bullish, bearish, becoming bearish, or flat. So they're technically all over the place. I expect this to basically stabilize and then most likely go higher. If we break below the 50, then we could head all the way back towards the very bottom. Otherwise, the target here long term will most likely be the very highs of 0.95. So let's look at cocoa. So cocoa fell absolutely apart on Friday. And I've been saying this for a real long time. I'm staying far away from this market because it's so unpredictable. Looks like it's going to trend to the upside and then it just completely takes your head off. So this is a perfect way to lose money, to basically trade cocoa. There have been periods where there have been really good trends and obvious where this is going. You can see here and also this trend here, but when we were trading in the channel, but recently it has been really chaotic, and I would stay far away from this. At this moment, it looks like we're going back towards support down here at the 23.27. Technical indicators are all turning around and are very bearish indeed. So let's look at wheat. So wheat is, we have to look at this candlestick here, really crazy candlestick all the way up towards 771, pull back all the way towards 713, and then continues to rally. So we're still overbought. So we are still at 73 on our bought. Technical indicators otherwise, MACD is bullish, stochastic is bearish, and the CCI is becoming bearish as well. It's still in bullish territory, but it's pointing to lower levels. So kind of expect this to pull back. It kind of needs to, considering that it is overbought. So at some point, it will mostly fall towards the 700 or the previous highs here, just above the previous highs here, which also are just at the 20 exponential at the 684 before going higher. So this was a massive rally, got way ahead of itself, and then it pulled back and kind of needs to pull back even more at this point. So hope you find this helpful. You're welcome to support the channel by subscribing, hit the like button and the bell button to see our news videos, and you're also welcome to join us over at Patreon. The link is down below. Good luck and thank you very much.